Hey folks, Realtor Chris Hall. Hey, if I could take a little bit of your time right now, I want to talk about the Fed meeting that's going to be taking place on December 13th. Talk about interest rates, do a little bit of prediction of what I think is going to take place pending when the interest rates go down. And yeah, so let's dive into it real quick. So over the past 2 years, we've seen 11 increases in the interest rates. Now, the biggest one people are going to recognize is going to be October of 2022. That's when the interest rates really shot up, right? Now, we saw what that did with the market then. It really stalled the market. Now, it didn't crash the market, but it sure the hell stalled it out. But a lot of folks don't take into consideration just the seasonal slowdown that you see in October. So it was really exacerbated by those interest rates shooting up at that particular time. Now, if the interest rates come down, pending when it happens, we might see the opposite effect of that. So there's a 40% chance that the interest rates are going to go up in March of 2024. Now, Powell has come out and he said, listen, that's going to be too soon. Right now, we just need to keep an eye on the inflation. We need to get closer down to that 2% inflation mark. Now, they've specifically haven't said 2%. They said on the downward trajectory to 2%. So they've said they're not going to wait for the inflation numbers to get down to 2%. But as long as it's moving down towards that trajectory, well, then we might start to trickle down the interest rates. We're going to make an adjustment, kind of see what it does. Then maybe we'll make another adjustment, see what it does. So it's not like it's 100% going to go down. It might go down, it might go back up, it might go down again, it might go back up a little bit more. Now, they've got a meeting in March. So after this December 13th meeting, which it's highly unlikely that they're going to increase or decrease the interest rates. Most likely the interest rates will stay the same. And I think that's a good thing, because if they drop the interest rates in Q1 or Q2, I think it's going to be too soon. I think if they do that, what we're going to see is we're going to see the home value shoot back up, because there's still a large pent-up demand of buyers. There's a lot of buyers that want to get into homes, but they're waiting for the value or the interest rates to come down. But even when the interest rates come down, you're still going to have a lot of homeowners that have a much lower interest rate. So if you're sitting at, let's say, 2.5% or 3% interest, and the interest rates drop down to, let's say, 5.5%, you're still not going to want to sell that home at that interest rate and buy another one. Now, you might, but you're probably not going to want to, if that makes sense. But if you're a home buyer and you've been looking at, let's say, a 7% interest rate and it drops down to 5%, well, then you're going to want to take advantage of that. So if that happens in the beginning of the buying season, then you're going to see more buyers than you do sellers, and that's going to push the prices up again. And then that's going to negate all the work that we've done to calm this inflation down. Now, Powell's come out and said that he's looking at Q3 to start dropping interest rates. Now, depending on who you listen to in the Feds, some people say that they're going to drop the interest rates next year 4 times, and some people say they'd like to do it 6 times. I think the 4 times rate cut is going to be the best approach. If I can find the video, or the link, if I can find the link, I'll put it down below. If I can find the video of Powell talking about this, I'll put it right here.
So over the last 3 months, the year-over-year PCE inflation was at 3.4%, core well over 3%. You've said in the past 2% remains the Federal Reserve target, but with no rate increase today, how long would you be okay then with a 3% or 3% plus overall inflation?
You know, the progress is probably going to come in lumps and be bumpy, but we're making progress. You know, I think the core PCE came down by almost 60 basis points in the third quarter. So the best thing I could point to you to would be the September SEP, where the expectation was that inflation by the end of next year on a 12-month trailing basis would be well into the 2s, and the year after that further into the 2s. So that's if you look historically, that's sort of consistent with the way inflation comes down. It does take some time, and as you get further and further from those highs, it may actually take longer time. But the good news is we're making progress, and monetary policy is restrictive, and we feel like we're on a path to make more progress, and it's essential that we do.
Basically, he was saying he would like to keep an eye on the interest rates. As long as we're moving down into that trajectory of 2%, then we'll look at start trickling down the interest rates. If that takes place in the beginning of Q3, so in the July. If that happens, then they might do some incremental interest rate drops, 4 of them throughout the year. Now, there's something else we need to take into consideration. Next year is an election year, so I promise you we're going to see gas prices come down. We're going to see interest rates going to come down. We're going to see a lot of prices come down on a lot of commodities just because it's an election year. So that's something we need to take into consideration. Now, take the interest rate, or rather take the fact that next year is an election year out of the equation. I could argue with myself that Q3 or Q4 would be the best time to drop the interest rates, but most likely it's going to take place. As long as something doesn't happen that nobody could predict, interest rates will probably start to trickle down at some point in Q3. Now, let's wrap this video up. I want to give you a little bit of advice. If you're thinking about buying a home right now, and let's say it's your first home, or maybe you're outgrowing your home, or whatever reason it is, I would not try to time the market. There are products out there, and maybe I'll put some videos about this as well, or maybe you could do a little research on your own. But there are products like 3-2-1 buy downs, or you could just buy a house. And then once again, they're not gonna go from here to here on the interest rates. It's gonna go from here to here to here to here to here to here to here. It's gonna jump all around. But what's gonna happen when these interest rates start to go down is the values are going to shoot up. And I'm starting to see consumers understand that, and I'm already seeing the market pick up. I've gotten more calls in the past 3 weeks than I've probably gotten in the past 3 months. I've executed more contracts in the past 3 weeks than I've executed in the past 3 months. So the market's picking back up. And part of this is these higher interest rates shocked people. It was a big pill to swallow. But now folks are getting used to it, and they understand that the values are not going down. And if interest rates do go down, they can always refinance. If you wait and you try to time the market, it's not going to be very good for you. There's going to be people that inherently will wait because they're scared to make that commitment to purchasing a home. And there's going to be people, and the same thing I saw during the COVID years, that they're going to wait and they're going to have a neighborhood or a school district or whatever it might be that they really want to buy in, and they waited too long, and now they will never be able to buy a home in that particular area. So once again, if you're in a position to where you can afford what you want, I wouldn't wait. I wouldn't try to time the market. I would go ahead and make sure your money's right. I always say, don't make a home purchase on a whim. Do your research, make sure your money's right, make sure it's something that you can actually afford. Don't do a 3-2-1 buy down and hope for the interest rates to go down, because they might not. If you do a 3-2-1 buy down, do it because it's something you're just trying to take advantage of, not because it's something that you have to take advantage of. But if everything's right with you and you're financially stable, I wouldn't wait to buy a home. I'd go ahead and just start to get on that ball right away. Get with a few local real estate agents and have those conversations, kind of see what they have to say about your particular market, and then go from there. So anyways, folks, that's the end of the video. I hope you got some value out of it. And until next time, have a great day.